Hey y'all, Joshua Pondexter with Stone Consulting LLC. Once again, we came at our lunch and learn. This topic is how to begin tax-free living, right? You got to start at some point. So taxes are robbing us of our wealth, of our time, of our energy. So it takes a burden, right? So there's no law that says you must arrange your affairs to enrich the United States Treasury. And that is not unpatriotic. We all are patriotic. We all love our country. Some of us have served our country, and not arranging our affairs that we don't enrich the Treasury. That's not unpatriotic at all. Right? Matter of fact, it's the most patriotic thing you could do if you do what your government wants you to do, is become a super taxpayer where they will subsidize your activities if they're the right activities. So let's just, without any further ado, we're going to go ahead and get into the meat of our conversation. We do have a PowerPoint we want to share. Slideshow. So the thought is how to morally, ethically, and legally reduce your tax liability. So everything we do, we want it to be legal. We want it to be ethical, and we want it to be moral. Right? So our conscience can be clear about what we're doing, right? And so that we can have tax-free living. So first of all, we must understand our total tax exposure. The money that we earn is exposed to both income taxes, both federal and state, sales taxes, excise taxes, property taxes, business taxes, right? So that's a lot of exposure to your income. And so you wonder why, when you look at your check, state and federal government get their grab. Then when you start spending your check, it's like, well, it's not going that far. That was even before inflation, it wasn't going that far. So this is some of the reasons, those taxes on that receipt that we don't pay attention to, right? So let's look at, this is someone that's making $100,000. Federal and state combined taxes for Illinois would be 28.95%, right? So about 5% of that is state taxes. And if you live in a state where there's no state taxes, well, God bless you, right? Then there's FICA, 7.65%. That's for Social Security, Medicare, things of those natures, thing we call social insurance, right? Sales taxes, state of Illinois, 10%. So every $100 you spend, they want $10 of it, right? Excise taxes, that's the taxes that's in fuel, utility, the cost of goods. Add another 1%. Property taxes average about 4%, and business taxes 15.3%. If you cannot see that your income is exposed to over 50%, if you even take away some of those items that's not applicable to you, you don't have a business, you don't have a property, you don't pay state taxes, you're still at 40–50%, right? A lot of tax exposure. So if we're going to reduce our taxes, I won't waste your time. Here it is. You need a business, right? Point blank system. So the reason that you're starting a business is not to avoid taxes, but to create revenue, right? And thereby you can reduce your taxation, right? You can utilize some of your tax dollars from your jobs to create to start your business. And so we don't want to get the impression that, oh, okay, I want a tax strategy. Let me start a business. No, it's just what in a business, you have a different scenario. So you earn, you spend, and then you're taxed. That's a business. As a W-2, you earn, you're taxed, then you spend what's left over. So the preferred tax position to be in is a business, right? So you can earn, you can spend, and then Uncle Sam tax you on what's left over. So that the spending definitely have to be according to business purposes, business needs, things of that nature. Okay, so first of all, we want to set up a tax-wise business. You can do a C Corp LLC, LP limited partnership, S Corp sole proprietorship. So I just put a sole proprietorship to say that a lot of people in that are sole proprietorship. That's not a business. You might be doing business, you might be offering products to service to people, but you are not a business, right? So the ordinary, the regular corporation is called a C corporation. And the reality of that is that you can actually get double taxation. The company get taxed, you get taxed. Nobody wants that, especially in a startup situation. So the LLC is a pass-through corporation, meaning that the expenses and the deductions pass down to your personal income, right? S corporation is a corporation that you have elected to be taxed as a S, which is a pass-through corporation. So that's a strategy, but why do that when you can set up an LLC that's already a pass-through corporation? So, so basically, if you are going to set up a business and it's going to be tax-wise, you want to choose the tax structure that best fit your situation, right? So tax-wise means I'm considering my tax implication. I'll make $100,000. I'm going to make over 400,000. So if over 315,000, you enter into another tax round. So it's like, which one of these structures is best for me when I'm making a whole bunch of money? So that's tax-wise, right? So now we have to say, well, okay, I'm just starting my business. I don't know how much money I'm gonna make. Hopefully you're ambitious and you're gonna make $100,000, $200,000, $300,000 in your business. And then you will be concerned with the tax implication. So any questions on a tax-wise business before we go into some of the things that we could actually, or just business period, setting these businesses up? What's the LLC? What's the C corporation? What's the S corporation? Anyone got any questions we could address quickly before we move on? Interactive workshop, got any questions?
Well, with the different forms. Oh, I'm sorry. Go ahead, Alicia.
I was just going to ask, does it have to be an LLC or incorporated, or I guess the safest way is to do that, but if it's not there yet, can you still, you know, treat it as a business? Your
sole proprietorship, right?
Okay.
So gotcha. you're doing business, but you're not a business. A business is its own separate entity. You could be a sole proprietorship and be a painter and make $300,000 a year painting walls, right? But you're not a business. You're still a person, right? And there's a lot of legal ramification to that. You have legal exposure both in your business and your person. The reason that you want to structure yourself is that you want to separate the two, right? You want the business to have its own legal and financial obligation, and then you want to have your own legal and financial obligation that you have separate. So definitely, if you're making money, you want to consider an LLC, because once you start making over $100,000 a year, Uncle Sam you kind of get on this radar for audit, right? If you're not a business. So those reduce your chance of audit, things of that nature. Brother Derek, you had a question?
Yeah, I was just going to ask, the different ways to develop a tax-wise business. You had up there, the corporations and whatnot. Which would you recommend for any particular, size of a business?
Right. So we're starting our business up, right? And we want to grow it as large as possible. So I would recommend the LLC because it has the flexibility that's incredible. Number one, you can start in the state as a LLC. The federal government will give you tax treatment called a pass-through, where the expenses and deduction will pass down to you. And as you grow, you can have that LLC tax as a C corporation or S corporation if you're looking to draw a salary or things of that nature, right? So it depends on your purpose. And you definitely want to plan to grow, right? So now, it's like, well, why would I do an S corp? Well, you might want to take a salary, you might want to take dividends, but you still want that income to pass through and not stay in your corporation. Then you have a C corporation, and you're making $500,000 a year. Now you could you have that LLC tax still can be taxed as an LLC. Then what you could do, you could set up another corporation to buy services from that corporation. So there's all type of different tax strategies that we could use, but you want, if I just simply said you can start as an LLC because of the flexibility until we get it, before we go to other strategies of multiple corporations, multiple companies, things of that nature, right? Because of the flexibility, the asset protection of the LLC, I'm bullish on the LLC.
Okay.
Okay.
Yes, sir.
Yeah.
Thank you.
So if somebody come with me and want me to set up their company, I'm probably going to say what? LLC.
LLC.
Right. Now, let's look at some, as Alicia stated, I'm a sole proprietorship, right? Can I still get these benefits? Yes. Sole proprietorship, LLC, you can get these benefits, right? It's just you don't have the protection. Number one, health reimbursement arrangements. That's section 105 of the IRS code. They call Section 105 plan. This health reimbursement arrangement is a game changer because we always cap to our adjustable gross income of how much medical expenses that we can capture. Now with this plan, you can get dental costs, co-payment, prescription, chiropractic and acupuncture services, massages, herbal treatment, right? So you have an HRA plan written for your business, all right? And now you can put your spouse on it, you can put your children on it, and now you can begin to capture all that reimbursement 100%. So you end up spending, $10,000, $15,000 in medical expenses for the family. You can recapture that, right? It's a game changer. And this thing's been around for over 50 years, right? Number two, hiring your spouse and your relative, right? It just makes sense, right? All the things that we're going to talk about, tax brackets, how to shift money from one tax bracket to the next tax bracket, just having your spouse or your children or your aging parents work in your business and shifting from your high tax bracket down to their tax bracket. That's a shift in money. Giving them ownership in your business, right? It's a way to create a family business, especially with your children. Matter of fact, as a side note, Sam Walton, the reason that his children still own that business because he set up a family partnership and everybody had ownership in the business. The only person that's got a salary was Sam, right? So they were able to transfer all that stock back and forth to one another without paying any taxes, right? And so one of the reasons today that nobody's been able to buy Walmart because the principals own the majority of the stock, the family. Excuse me. There's some water. That's incredible, right? That's the power of hiring spouses and relatives in your business to create a family legacy, create a family business. Number 3, vehicles, multiple vehicles. I just did my own taxes, and I'm probably, I paid my vehicle off last year. And then with depreciation, I still got $9,000 of savings on my bin, just in depreciation, man. That wasn't even the mileage, the car washes, the repairs, the tires, and all those things, right? So that's just one car. So if I had multiple cars, I could put a percentage of another car into use. I'm talking about tens of thousands of dollars of savings. Then travel is a big deal. So now we want to make travel fun, right? So here's a sidebar. I'm getting ready to go to the Dominican Republic for 2 weeks, month. I hadn't decided yet, but I know I'm going. So now my brain is like, how do I make that a business trip? So sit down. I'm gonna still be doing my workshops from the beach, you know. So, but hey, travel. You know, a lot of people talking about, oh, make travel deductible. There's rules to that, right? You got to follow the rules. So the number 1 rule on domestic travel is that I must work 4.5 hours. The majority of the day I must work in business, right? So I'm a realtor, and I go to, I don't know, what's a great place to visit in America? New York City. That's an expensive place to visit, right? And so now I got hotel, I got food, travel, all that. And so I'm in Soho looking at properties all day, 4.5 hours out of the day, and stopping in restaurant and doing all that, right? And then, oh, my wife is in my business, my children in my business. We just took a family vacation to New York City, 100% tax deductible, right? Once again, you know, I'm not a realtor. That's somebody else. I'm a real estate investor. So I went down to the Caribbean to look at property, right? So I spent 4.5 hours every day I was there for a month looking for properties, right? Gonna take me 6 months, 9 months, a year to select the property I want. So I need the multiple trips anyway. So now I'm down in the Caribbean, hotel, flight, food every day. I'm looking for real estate to purchase, right? 4.5 hours a day. Now I get 50% of that. Would you like for 50% of your international trip to be paid by your government?
Absolutely.
Oh my goodness. Yeah. So
Absolutely.
and then my spouse is in my business, my children in my business, and we all are going, right? Since I'm gonna be there a month, I may have to send them back early. But anyway, the wife and the children. So, hey, this is so that then of course there's this number 5, business retirement. You can get a SEP, you know, or you can get a Roth 401k, or you can set up what we call a micro 401k. You can start it as an individual, and then it can grow in your company, right? So these are some of out of the box expenses for consultant and small business owners who are just one person, 2 person. You can use these things. I'm gonna tell you, number 1, we're gonna go this right quickly again. This HRS section is a game changer, especially when you're parents and you're raising children. Say my spouse is working, I'm working in the business, I don't have a medical plan. She's paying $800 a month coming out of her check. I'm able to reimburse the family back $400 dollars every month of that money based upon my plan, right? That's reimbursement, that's medical expense. Then my herbal treatment, my gym membership, all this stuff, dental costs, right, becomes tax deductible, right? So now, travel, I'm gonna jump down to number 4 again. Travel, a lot of people don't take travel to the doctor's office, to the dentist's office. That travel there is deductible, right? So I'm gonna give you another one. The travel to acquire practice is tax deductible. Who knew that? Right, yeah.
I certainly didn't know that one.
I want to tell everybody in the choir, you know what I'm saying? You know, you missing your deduction. You got to come down here at least once or twice a week so we can get the songs right, right?
Right.
So yeah, that's tax travel. Right? There's a whole gamut of travel that we can look at, national, international, that we can make business. Also, we want to include our family in our business. Big deal, right? Let's go back to the slide. I just wanted to take time to share that with you. And we're going to talk about tax brackets. You know, the children got different tax brackets than the wife. So I'm making several $100,000 a year, and you know, I got 3 of them crumb snatchers, and they all old enough to work in the business. I can pipe down a minimum of $12,000 per child to their 0 tax bracket. They have no tax consequences on none of that money, right? Pipe that down to it. Or if I have an aging parent that's on Social Security in a low tax bracket, I can hire them, pipe money over to them, because we're piping money to them anyway, right? Okay, all right. So of course, business retirement accounts, they you definitely need to save for retirement. There's no doubt about that. So these are some of the out of the box things that we're looking at now. So here we go. Any questions on those? Because I got some more for you. Okay, so listen, the Internal Revenue has over 6,000 pages of information on the IRS code. 6,000 pages. 30 of those pages deal with the numbers, right? How much I should deduct, you know, 50% on this meal, 100% on that meal, how much I get for entertainment, how much I can give as a gift, how much I get for a child tax credit. That's 30 pages. The rest of those pages, 5,970 pages, are incentives on what the Internal Revenue Service wants you to do, right? And so they don't want you to be a consumer. To be a producer, it's you got to retrain yourself. We have been trained to be consumers. We wake up consuming, right? So I got $100. Well, no, I got $20 in my pocket. But anyway, so if I say I had $100 cash, the only thing I can think about is, well, I'm gonna go out and spend that money, instead of a producer thinks about, how can I take this $100 and make money with it, right? So this is Uncle Sam wants you to be a producer. The tax code is designed for business owners and professional investors, right? What's a professional investor? Someone that spend over 500 hours a year in investing, real estate, the stock market. You got to get that, you got to hit that 500-hour criteria, right? So, and so now a business, they want you to be a producer, right? So as a business owner, you are producing, right? You're producing employees, you're providing a product and services that's producing money, that's producing taxes for the government. So they subsidize your business. So you made $100,000, you take 50,000, put it back into your business, you can do all that tax-free. That's crazy. They subsidize, that's 50 grand tax-free. So they only got 50 left. If you're an employee, with $100,000, you get taxed on the whole 100, right?
Absolutely.
Now, yeah. Now, if you're a business owner and you invest in real estate, right? You can invest in real estate and buy it through your business. When the money comes back, it can come back tax-free. There's some rules, but it can be done with depreciation, offset of the taxes on the depreciation of the property, things of that nature. You can virtually get that money back tax-free, right? And then you're a business owner and you buy inventory. You got candles, you got body scrubs, whatever you're making. You used to couldn't even write that inventory off until you sold it, right? So you got $50,000 of inventory. For you to make some money, you can write that off now, inventory, right? And then if you invest in the right things, they don't care about you investing in Google and Amazon Prime. They want you to invest in energy, oil and gas, right? In the development of these type of activities, right? So very important that if you do some investing and you invest whatever the money it took for you to invest in those instruments, and then that money come back to you tax-free, boom, right? And then you can write off that. You can invest in agriculture, right? So, but these specific stocks that we have to give you the details about where you to put that money. But yeah, state and municipal bonds to help your area grow. Those monies can come back to you tax-free. See, now we're starting to think about tax-free living. So we have looked at our business income. We looked at all those things that we can drive our income down 40, 50, 60, 70%. And then we have this, we're going to try to get it down to zero. And then we're going to start investing that money into things where that money can come back to us tax-free. Charity, right? You can give to charities through your business, right? Make your church contributions through your business. You can give more money, right? You get more than that 10%, and you can get a bigger bang for your buck. So you want to be a producer, not a consumer, right? So let's talk about 10 quick ways to save on taxes. Number one, any expenses can be tax deductible, any expense, right? But there's a test. It must be ordinary, it must be necessary, and you must document it. So what it is, so let's say ordinary, right? So it's ordinary for a consultant as a salesperson that I take my clients to lunch, right? Now, if I'm dealing with middle-class clients, it's not ordinary for me to have $2,000 meals with them, right? So that's not ordinary, but I can, can have $50 lunches, right? That's kind of high for my taste, but gonna have some lunch, and it's necessary. It's necessary for me to promote my business, right? And I'm documenting. I documented. I met with this person at this location, and we discussed referring business one to another. We talked about building a business plan for them, and I spent $30 on lunch, right? Documented, right? Number two, home office. You can have a home office if you have an office somewhere else. Your home office must be your primary location, right? Because that's where you do your administrative work, things of that nature, right? So that home office deduction can be humongous because now you can write off more of your interest on your mortgage, property taxes, repairs to your property, any type of improvement for landscaping, things of that nature. Snow removal in Chicago, lawn care. Utilities, right? You can now capture more of that with the home office deduction, right? Probably can get you a bigger home. Right? So, and so we're bonus depreciation, right? So that's real estate. You can, that's magic. Depreciation, a lot of accountants, CPAs are not even utilize this. And so one thing you have to do is cost segregation, where you would do a professional, get an engineer and a CPA to look at what's the landscape, the value of the property, and the value of the fixtures in it. So you have three segments that you are depreciating over time, and they all depreciate on different schedule. Of course, the commercial property is 45 years, residential 33 years, and then the stuff inside depreciate as different year schedules, right? But that depreciation offset income on any type of, well, I'm not gonna say any type of income, because this is where we have to watch our income, passive or active income. So you're a professional investor. You got 500 hours into your business. So you active in this game. So now that becomes active income, right? Active income offset active income. Passive income offset passive income, right? All right, so bonus depreciation and amortization, right? Everything we have now is software. When you buy software, you can amortize that. I just spent over $10,000 on some lending software, right, for small businesses to offer them loans, right? So now I'm able to amortize that debt over years, right? Take it off, right? You can rent your property, your primary residence for 14 days, right? I don't know if you want to do that, but hey, if you was $1,000 a day, that's $14,000, and it's tax-free. Not paying any taxes on that, right? Got a nice little swing condo. You run it out of the country, Joshua, for for a month. You go ahead and Airbnb your spot for a month. You see, right. So half of that month tax-free, right? And of course, we talked about travel, business purpose, how to set up that business purpose, right? That 4.4 hours per day mark, 100% national, international travel, 50%. We talked about using the child tax bracket. So them children that have that zero tax bracket at $12,000 want to utilize that. Then of course, you need a good tax preparer, right? And continuous education to get financial literacy. That's important. It's a write-off. Number 10, never speak to the IRS, right? And one of the things I had on this list was never have a Schedule C, but that comes with an LLC, because when you have a Schedule C and you use the home office deduction, they consider that a hot item for being audited, because it's a big ticket expense to reduce your tax liability. And so we're not worried about that, because we're going to document, right? Once again, this IRS code is set up for business owners and professional investors, right? Then you want to look at the types of income that you receive. Earned income, tax the highest. Passive income from real estate, taxed at 15%. Portfolio income coming from a portfolio of dividends, stocks, and bonds, taxed at 20%. Earned income, 33%. So you want to kind of watch where you're getting your income from. And as you graduate, you want to control where you get your income from, right? Yeah. So because you can control the taxes, right? Then there's tax-free income, life insurance. Nobody get excited about that because nobody want to die, right? But hey, if the other person died, you got tax-free income, right? Real estate, and real estate is magical, right? It's when you look at the wealthiest families in America, their portfolio is heavy on real estate and business, that they own their businesses, right? And then of course, deferred taxation. That means we're kicking the tax down the road, putting money in 401ks and IRAs and things of that nature. So it's this is just the beginning. This is the beginning on tax-free thinking, right? And so what we're going to say, your tax planning should be a part of your wealth building strategy, right? 40 to 50% of your income is exposed and being impounded for taxes. So you want to make sure that this is a big part of your tax. I used to tell people that, hey, if you have a financial advisor and they trying to just sell you a life insurance, a mutual fund, a stock, a bond, you got the wrong person. That's not your problem. Taxes is your problem. You save on some taxes, you can buy all the life insurance and stocks and bonds you want, right? Makes sense. Listen, we want to thank you guys for tuning in. We want to ask you to subscribe, like, and share this video with your friends. As always, you can go to joshuapondexter.com for additional information. You can see the list of services that we offer, and then you can just schedule yourself an appointment. All right, bye for now.